We make that decision based on impulse.
That in itself shows that you're not able to afford
aggressive marketing just to get people to sign up for the scheme.
Reshaping consumer behavior. Hello everyone, welcome to yet another episode of Beyond the Headlines, the go-to space for the top stories that made the headlines and more. My name is Amalina Kamal.
And I'm Hazwin Hassan. As many as 1.4 million Malaysians living on credit, mostly credit card holders, have sought help from the Credit Counselling and Debt Management Agency, otherwise known as AKPK. The agency says that credit card approvals are easily obtained, making access to them effortless. Credit cards can even be approved over the phone, with banks offering credit limits without much hassle. And of the 1.4 million who sought AKPK's help between 2006 and November 30th last year, 53.2% of them struggled with credit card debt.
Now, personal loans accounted for 32.9%, followed by housing loans at 5.1% and car loans at 4.5%. Now, in 2024 alone, about 2,000 people reached out to AKPK. Now, it's a significant jump as between 2006 to 2023, an average of 66,000 people sought the agency's assistance annually. Now, of the 1.4 million, around 540,000 signed up for the agency's credit management program, with nearly 60,000 cases involving 3.3 billion ringgit in areas successfully resolved. Now, the agency's corporate communications head, Nirmala Talib, recently told the NST that credit card holders fall into debt by overlooking high interest charges. Now, credit card interest rates are fixed across all banks, with a standard flat rate of 18% or 1.5% per month.
And as a result, a significant portion of monthly payment goes towards interest rather than reducing the principal debt, making it difficult for borrowers to clear their balances effectively. Rohanizam said it's a situation proving costly. And before things spiral out of control and more people sink into deeper debt, how do we manage this crisis? So we'll have more answers to that today with the help of AKPK's Head of Household Financial Education Department, Nirmala Subramaniam. Nirmala, welcome to the show.
Thank you. Thank you for having me.
It's great to have you here, especially on such a crucial topic that many might think otherwise, right? Now, to start, when we talk about financial literacy as well as responsible credit management, AKPK, of course, promotes budgeting strategies like the ratio of 50-40-10. Now, let's expand that a little bit. How effective has this been in reshaping consumer behavior?
Well, 50, 40 and 10 is a guide that we give, to say that when you have, with your income, any loan repayment, we advise a person to actually maintain it below 40% of your income. So whatever loan repayments that you make every month, it's better if it's below 40%. And then you have 10% for savings, and the balance 50% is for your living expenses. This is an ideal ratio. But then again, we also have to look into the actual income, right? So if the income is between the range of below than 3,000, okay, if I were to take the income 2,000 ringgit, 40% means 800 ringgit, around that. So if I were to take 40% going off to loan and 1,002 for my living expenses, that's not going to be enough, especially if you're living in KL, right? So in this case, this ratio is ideal if your income is between 3,005 and above. But if it's below that, then you have to reduce the debt to income ratio further. So it's always, the rule is actually always ensure you have enough for your living expenses before committing to any other loans that you want to take. So ensure whatever that you want to pay should be this. So we guide consumers, we guide borrowers, we guide in our classes, when we conduct financial literacy, like this is a ratio that you could actually practice that would actually help you from, especially knowing how to calculate your debt to income ratio. So how do you calculate your debt to income ratio? You know how much you pay every month for your loans, your repayments, and you divide it upon your monthly salary, your net income, and then you would know your ratio. So always just know this ratio and ensure it's within a range of 20 to 40 depending on your income, and that will help you to not overcommit, to not know more, to not take up more loans than what you can afford.
But beyond budgeting tools, how can we further emphasize to borrowers that before they even borrow, they are actually within that position to loan?
Yeah. So this is where we always say a client, a borrower, any one of us should always remember these 3P rules. If I want to take a borrowing, the first P is the purpose. Why am I taking this loan? So if I'm taking up this credit for the purpose of a productive purpose, meaning, like say, even if I take up a loan to buy equipments to grow my business, right? And that is considered a productive loan because you're using this to earn more. You want to grow your assets. Or like, for example, I take up a loan to buy a property, an asset. So that's an asset that's appreciates, and hence I will grow my asset. So that's a productive loan, so I'm earning. But if I were to take a loan more for my lifestyle, more like towards having a holiday, or getting the newest gadget, just to be in trend, that is considered an unproductive loan. So we don't want to encourage unproductive loan because that's going to add on to your burden. It's not going to give you any kind of income. So purpose is very important, knowing why we are taking that up. And number two is, of course, your payment affordability. So that's where we have discussed that earlier, knowing, make sure it's within your 40%, 20 to 40%, depending on your income. So know the ratio, ensure you can afford. And you've got to look at other costs to it as well. So for example, I'm buying a car, or, car is just not the monthly installment that's going to be my expenses. There are other expenses that come along with that. And if I don't calculate that affordability as well, it's definitely going to eat up my budget, my existing budget. Because car comes with expenses. We've got to take it, right? So that's number two. And number three is looking at the payment records. So this is very important that we all know there's this central credit reference reports. We have this credit scoring. So we need to ensure that our payments to all our credits are always on time, so that we carry a good credit score that would able us to get a loan. Take up a loan. Because if we don't check up our own score, and we tend to commit, we probably, like for example, buying a property, I paid the down payment and then I went up to take a loan, but if my loan doesn't get approved, I may lose my down payment, so that's a loss.
These are little details that people might not necessarily realize. I see.
So we need to actually ensure that we check our own self. It's good to check your own credit records yearly. We recommend that, so that you know whether you're overcommitting or not, whether this is within your receipt, or is there any other issue within that before you actually take up. So these 3 P's, purpose, payment affordability, and payment records are very important.
So you speak about being wise in your decision making when you want to take out a loan, right? So obviously phones, fancy gadgets, that's out of the question.
Unless you're telling me that I have to invest in these gadgets, probably I'm making money through photography, or I'm making money through podcasts, right? Like this. So I need that gadget, but I'm making money. I just want to grow that bigger, So then those items would become something for your productive use. But if it's just merely to be in trend, the fear of missing out, FOMO, then that's more of a lifestyle. So analyze the details and the reason why am I doing it, and there is income out of it. Then yes, you're growing your like, you need to get a latest laptop because you're doing design, and you've got the job coming in,
Right,
and
right.
so that's on a different purpose. So you are like investing in it to grow bigger.
Right.
So the purpose has got to be very clear here.
Okay. And Nirmala, some experts suggest mandatory financial education and clearer cost disclosures for consumers, particularly among BNPL users, right? And so how can AKPK play a role in advocating these reforms?
Yeah, if you talk about BNPL, I think that's the trend now. It's very easy. It's very convenient. I would call it convenient spending, So it makes it very, very easy. And if you look at the spending by the CCOB's report on BNPL, like they say, a majority of spending are going towards fashion and gadgets. So we are not concluding, but we can see that it's more towards a person's want, right? So as I mentioned, when we take a loan, rather it's for a productive purpose and not just to fulfill your wants. So what can be better is truly we agree with the mandatory education, because let's say if I give education in school and at that time you're not spending, okay, you take it, it's there,
But the impact is not there. Yeah,
impact is not
Correct.
there because it's not that timely education. It's not that at that time I'm making that decision, and more often we make that decision based on impulse, right? Sitting at home scrolling, and then we tend to see something, and then on impulse, and it's so fast to click, just 3 clicks, you're there
that's right,
already,
yes.
right? So impulse is actually the enemy to this. So how do we curb this? And hence why we feel like the platform providers, the credit providers here could probably just provide education as well, timely education at the point of making that decision. It's not that it will prevent them from buying, but you also get better buyers, you get better borrowers, because they are educated, they know the terms and conditions, they know the consequences if you don't pay. It's clear there. So you really need this item, and you get better borrowers. So there's no wrong to that. And we actually did one similar program when Bank Negara actually announced, this was way past in 2019, where Bank Negara announced this first home buying scheme. They had this budget given, and in order for them to be able to take up that facility, the potential borrowers had to go through an online module called Rumahku, which we prepared together. So only if you have completed that, you'll be able to proceed to apply for the loan.
I see.
So it's not a guarantee for the loan application approval, but it's more of for you to apply.
But it's like a way to encourage responsible
Yes,
borrowing,
correct.
or at least active sort of consideration when it comes to when you want to take out the loan in that
so
sense, right?
the first thing we did there was you get in, you do a calculator looking at how much you can really afford, right? And then of course talking about the other parts of home, like the MRTA, the consequences if you don't pay, and really. But what we realized after that there were a good percentage of them who wanted to buy, they had the intention, but after doing the calculation they said, no, we are not ready yet. So I feel I'm not ready yet. I thought I was, but I'm not.
Right.
So sometimes we need that kind of trigger, we
Assurance,
need that kind of
yeah,
realization to
Right.
tell us, hey, look, you're not ready yet, maybe you should not. So that the platform users, the credit providers, they, it will really help if they are, they put up this kind of short. Of course, this is a short loan, you don't expect them to go through a long this thing, but a short a short nudge, to say like, hey,
Right.
this is what you're going to pay for the rest of the time. So do you really, and maybe the details of it, that could actually get you better buyers, better borrowers, right? So I feel it's like a responsibility of all in terms of getting better consumers, better borrowers. So we really encourage them, we could work together in terms of providing the financial literacy there. And we feel that, because currently when we did a survey also, many people, when they want to make financial decision, they seek advice from family and friends.
But the family and friends are not necessarily the best sort of
exactly,
advisor,
because
right?
they've been doing it.
Yeah.
So they feel that that's the right way, but that not necessarily be the right way. Or it may be okay for that person, but it may not be okay for this person, because our finances differ. You know, every one of our needs and wants are different. So we have to analyze and
Ourselves.
acknowledge what we have.
Understood.
And I suppose that having platforms, be the buy now, pay later platforms, be more proactive in sending out a clear message, educating. Would you agree with more for a push for clear debt risk warnings, similar to say what you see on cigarette packs, right? To ensure and to encourage that people borrow responsibly.
Yeah, definitely. I mean, this is a continuous thing. It's going to be, you know, an ongoing, and credit will evolve. The way credits are given, and you know, things will definitely be evolved. So continuous education nudges are very important for a person to really keep reminded, you know, that hey, look, I need to ensure that I can afford this, you know. I can really afford this, and I really need this to buy this now. So as I mentioned, loans are not bad, credits are not, you know, it's not to say that it's wrong, but if you take it for the right purpose, you take it within your affordability, and it actually can help you, you know. So but the problem here is when you tend to overcommit. The problem with BNPL that they recently see is at one time some people are going on an average with 5 different
The multiple
providers, you know, loans
contracts of
and
BNPL.
contracts. So and when we look at BNPL, the amount you take is small. Okay, one is small, but if you have many,
Accumulation
it's
of
not
it,
going to be
yes.
small.
That's right.
So because you're taking small amount, you don't realize it on your own. You may not realize it, right? So I would not know, like, I'm overcommitting. I don't realize that I'm overcommitting because it's small amounts. And just like when we talk about expenditure, when we always talk about expenditure, we say people, hey, you need to reduce, and then they will jump, hey, I cannot reduce, I'm already going to basics. Okay, let's look back at the small expenses that you make, that sometimes it's not really you
Yeah.
can avoid.
It's that saying, sikit-sikit lama dah jadi bukit.
Oh, betul.
Betul kan?
I
Okay.
mean, that is
That's
true. We
correct.
say small hole can sink a ship.
Right,
You know,
that's
you know,
right.
small leaks can actually sink a ship. So we have to identify. So when we know it's small, but when it's many small, it becomes
It
big.
becomes an
So
issue.
hence, when we look at BNPL, we notice that people tend to overcommit, and that's why, you know, if they don't really realize how much or how many loans they have taken, they will lose track. So the now we are going to have them regulated, and you know, the credit report is a compulsory thing, so that would
Yep.
really help. So in order that, you know, when I print my report, I know how many I have. So this is also why we encourage people to print, so you keep that as your report card, you know. Hey,
right,
look,
yeah.
I've got this many already, you know, I should stop now. So it's like a reminder for yourself. So as a normal consumer, maybe, you know, while waiting for that, you should have it visible to you. Every time you take a loan, you should write it down somewhere, or, you know, keep it in your phone. So before you commit to the next one, you know you have this many
Right,
commitments
right.
already.
Talking about BNPL, we also spoke earlier with Doris Liew, Economist, on the whole commitment and self-control and how we should manage our BNPL offerings.
The buy now, pay later, or in short, we call the BNPL, has become the preferred financing option for Malaysians at large. At least 69% rely on BNPL exclusively, and the remaining use it for essential purchase. Do you think that this is an indication that there is a gap in financial accessibility?
So you see that the fact that 69% of BNPL users relying on it as their only financing method is quite telling already. And it signals actually both a gap in financial accessibility and also an issue with financial literacy. So one of the main reasons why BNPL has become so popular is how easy it is to access. So compared to things like credit card, personal loans, which require mostly credit checks on your personal history, and financial history, BNPL usually comes with very, very little oversight. You just need like a click of a button on your phone at your home, really easy to access. So there's no real financial assessment by the BNPL providers whether the user can actually afford to repay what they are borrowing and whether they have the financial means to do so without excessively straining themselves. So that is a concern we are talking about here. What's even more worrying is how frequently people are using it. So CCOB, Consumer Credit Oversight Bureau, they actually conduct a BNPL survey in 2024, and it shows that 60% of BNPL users use it more than twice a month. Right? And that tells us that this isn't just an occasional thing, right? Like what you mentioned about your interns, you're raking up a debt of around 9,000 ringgit, which is a huge amount of money for low income and financial illiterate people. And people are so even using it because it's so convenient for smaller household items for day-to-day purchase. And this kind of usage isn't really sustainable in the long run.
When we talk about debt accumulation, right? So the risks include damaged credit scores and financial stress. But in this case, what do you think are the specific measures that the government can help introduce to protect consumers in the long run, instead of having to, fall into the excessive debt? I mean, I understand that we have other conventional loan sort of regulation, but in this particular BNPL payment scheme,
BNPL scheme right now, it doesn't really falls under a lot of the existing regulations. We have Financial Services Act 2013 that is mostly regulating banks and financial institutions. We have Money Lender Act, we have Pawnbroker Act, and those all does not apply to the current BNPL scheme. And what happened right now is BNPL operate in the kind of legal gray area. And because of that, basically all these providers, they can do anything they want without any kind of regulations overseeing their business practices. So we see a lot of troubling practices because of this. So things like predatory or misleading advertising, hidden fees, overly aggressive marketing just to get people to sign up for the scheme. And that's particularly concerning when you think about how many people are actually taking on debt without properly assessing whether they can afford it, and they don't get the same protection they will get if they are using credit card or taking out a personal loan, for instance. For that issue, we see that there is an upcoming Consumer Credit Bill 2025 that's being tabled early this month in the Parliament. It's likely that the bill won't get passed until more like the second half of this year. But the fact that there's already a consumer credit bill being in place is a positive sign that this has become a very concerning development. And particularly, Bank Negara Malaysia has also spoken about how this has become an issue. And while now the household debt overtaken by people using BNPL is still relatively small. It's about, less than 1% of the total household debt. The fact that the trend is increasing, people are using more in terms of both the volume and the value of the transactions, means that if unregulated, this is just going to pile up over time.
I mean, you have seen, I suppose, based on observations that late payments have taken place, defaults have taken place, or is it yet to be determined? Will this lead to a bigger percentage of people falling bankrupt if not properly governed?
I would say that buy now, pay later services are usually aimed at lower value purchases. So clothes, gadgets, everyday items. Right now, even to the extent of motorbike, that's like 20,000 ringgit. But it's not things like house loan or car loan that cost hundreds of thousands of ringgit. So when we talk about regulator, they have bankruptcy. So unlike traditional credit, the consequences of defaulting here aren't really that severe. Unlike banks that can charge you with bankruptcy, BNPL providers doesn't really have that power to do so. So at most, they just lose access to their BNPL accounts or their online shopping account. So to be declared bankrupt, I don't think that will be the case. But it's also important to know that just because people aren't ending up bankrupt doesn't mean that they're not under any kind of financial pressure while taking on this debt.
But when it concerns the CCOB, division and having to gazette the bill by 2025, I just want to emphasize how important it is, because it seeks to enhance consumer protection here. But to what extent can it actually help financial literacy among Malaysians, at least in terms of creating a fairer and more transparent sort of credit industry in Malaysia?
The CCOB itself, in terms of financial literacy, is not meant to fill that gap. It meant to fill the legal loopholes that the BNPL services are exploiting right now. So it's meant to ask them to provide more fairness, transparencies, and more fair and accessible kind of business practices in a responsible manner. It's meant to regulate mostly the service provider rather than educating the people who take on this debt. Also, transparency is rather important, because when people look at whether they want to sign on to the BNPL services in the first place, most of the time they look at, well, it's 0% interest fee. So that's why they kind of take it on. But with all these hidden fees and aggressive marketing tactics, then they are not even aware how much service fee, how much late payment fees that they have incurred on their monthly bill. So these are but concerning, and these actually kind of impede on the rights of the consumers for to take on this loan. For financial literacies, I think it has been an ongoing issue in our Malaysia's population, and not just because of the BNPL scheme, but there are many like people taking on personal loan, people going to money lender, people going to bond broker. So these are another side of the discussion and the debate, which needs proper addressing.
It is a matter of culture, right? The habit of spending, we are addressing that, right? The NPL is just one mechanism, and as you rightly mentioned, the issue of financial literacy actually expands beyond just this particular scheme. It is a way how we look in terms of, again, our spending habits. Do you think there should be more buy-in from the consumer associations to also work together with all the service providers in terms of, ensuring a safety net when it comes to purchases?
That's part of the things that maybe we need to educate our younger generation, starting from school, to how to manage their personal finances. So these are not just dealing with like consumption side, but how they manage their personal finances in terms of savings, in terms of spending, in terms of putting up enough money for the future and during the rainy times. But these are very much needed conversation. And at the same time, I also want to emphasize on how currently we don't have a comprehensive data on this yet in Malaysia, whether how many people are financially literate, how many people take up BNPL loans, how many people are defaulted and financially strained because of this, what is the behavioral impact and insights from our consumers from different aspects of life. And I think it's very much important for our regulators to start looking into gathering data, gathering insights, interviewing people, because we can talk about it at a very high level, looking at all this high level data, but what actually drive those behaviors in the first place?
Is it because, just out of curiosity, it's because we are now at the age where everything is within our fingertips, meaning the freedom of purchasing? Because otherwise, the human behavior of like, even if it's free, you wouldn't want it, but the desire to purchase and having it, that satisfaction, that personal gratification, is something that we must consider and really look into.
In fact, this is not just isolated to the case of Malaysia. We've seen in Singapore where the BNPL scheme like Economist has been ongoing way before it penetrates the Malaysia's market. In the US also, there's this BNPL scheme going on, and we see that data from these two countries itself tell us that people who use the BNPL service are more likely to spend more, like about 10 to 20% on average, more than those that does not use these services. And in the US also, they kind of do the study, like people using BNPL are generally more indebted, even compared to people using credit card or personal loan, just because it's so easy to access it. Because this scheme also targeted at the low-income people, because they don't need to get their credit access, they need to be financially savvy, and they don't need to have a good track records on keeping up with their loans to be able to be handed that amount of money.
Right from that particular interview, so Doris mentioned about the option of BNPL having to, just spur the economic growth and trade domestically. It's a healthy way of looking at it, but at the same time, if it goes unnoticed, if it's unregulated, as we mentioned earlier on, the small sort of purchases or commitments will eventually bite us back. So in that sense, how can we have a win-win situation for consumers, the retailers, and those who are like AKPK, trying to mitigate and facilitate that the Malaysians at large don't fall into debt?
I guess it's a collaboration between all parties. If it's more of complementing each other, and if we look at the borrowers, as a borrower, we need to be educated as well. So education, continuous nudges are needed to ensure that we don't overcommit to the borrowers. And of course to the providers, it's also providing transparency, being very transparent about what you're providing. And be very clear about the hidden charges, penalty charges, late charges. So even though the providers, many of them are giving free interest repayment,
But the management fee or the admin fee.
yeah, but that's the administration fees. And also if you delay, the penalty fees are quite high. So you got to be transparent. So at least you get better borrowers, at least they are aware, hey, if you delay, can you actually pay? So messaging should be very, I wouldn't say scary, but it should be very meaningful.
Cautionary.
Cautious, so you should really hit the point to say like, hey, do I really need this, and I do. So we believe that the collaboration between these parties would actually help us, in terms of we want to manage, like if I remember many years ago when I started working, those were the days where credit cards were growing, and you could get a credit card just anywhere. You go to the mall, there'll be so many of them. Every credit provider is trying to get a client, and hence when people just grew with credit cards. And those were the days where credit card was seen like, I have to have the 5 C's, where you have these credit cards in the wallet, seems to be like glamour.
The MX, the black card, and
the
like
more
that
cards I have, it seems to be,
the
you're
more
very
swanky you are,
but now that's not, it's scary to have a credit card, and people say and if you look at the current youth now, they don't go for that much, because they have the other option here now. So if we don't, not saying credit cards are bad, again, it's the usage of it, right? So but if we don't provide or do the preventive methods, messaging or methods now, initiatives now, it's going to go and lead us to that again. So but we are better now. We have more platforms. I would say consumers now are much more educated. They have more opportunities because everything is fingertips. So look for the information, and do decide whether you really want, do your analyze the situation, analyze, do I really need this, and don't get carried away. But again, like you mentioned, is a lot on, I know I need to do this, but I don't do that. So it again comes back to behavior. That's why the nudges would really help in terms of triggering your behavior and triggering your thoughts there. So the continuous, it has to be a continuous effort. It cannot be like a one go thing.
It's really just dealing with stubbornness, isn't it? You're just stubborn.
Yeah. So we need to keep that reminders for ourselves. I sometimes when we don't write it down and we don't visibly see it, we will never realize it. We will keep procrastinating. I don't have, it's okay, I can manage, and things like that. Just like when you go on a diet and everybody says you have to do your calorie count of what you eat and everything. Because that's just to create the thought, hey, one plate of that actually can cost this. But why we do that is actually to trigger the thought. So the same thing with the finances, so it works that way. So if I actually see, oh, I'm actually, spending this much, this is going off, then I would be more aware of what's going, rather than not writing down, not I still believe you have to visibly write it down. You have to see it.
I believe what you're referring to really is to form discipline, to be disciplined in your spending, in the same way like you mentioned diets. You have to be disciplined. If you want to go on you want to lose weight or you want to get fit, you have to be disciplined.
It's all in you. But
that's right.
Sometimes we don't have that drive because I don't have that discipline, because I don't have the drive. I don't have the motivation to it. So setting that small
goals
and that motivation of why you're doing it, setting that purpose is also very important to drive you there.
Can we, I'm curious on this, right? Because AKPK deals with people who do come to your agency and having to restructure their finances. Have you seen like a growing concern, especially when it comes to the younger population, maybe those who have yet to even, the debt trap started way before them getting a job? I'm just asking this because we're talking about this whole BNPL and easy digital lending access, right? I'm hearing stories of like maybe even interns can get like credit limits of up to 9,000 ringgit and they don't even have a monthly income.
So what we do see with clients who are coming to us, I mean, still a majority of them are between the age of 35 to 50. We have a bigger portion because this is also coincides with the bankruptcy data. These are the age group that is the most bankrupt. But why here? It's because this is when your commitments really grow, right? Your family is growing, you're starting a family, your parents are getting older, so you have all these expenses. But why you couldn't sustain here is because when you started off, you were living for the moment, all the thing of like, I don't think I'll think about finances after I get married. I think about finances after I start a family. I'm still young, I want to enjoy.
But that catches up to you.
So that is the reason why at that age you are not able to sustain, because when commitments suddenly hit you here left and right, and you're still with the same habits and the same lifestyle, you're not going to be able to meet that, right? So if I were to raise the concern, it is rising, but it's because that we are seeing the numbers growing here and it's not starting off right. So it's very important when they start off with their first job or even while they're studying. I think the highest risk is if you don't have an income and you're started on debt, that is like a greater danger sign. I think, like I say, when you take the debt, it's got to be not for your lifestyle. Definitely, if you tend to take debts for lifestyle, then you're heading into a deep trouble because it's going to go on. And when what we see is the trend of people getting into debt is because in most cases is because they take up one debt to cover another. I've taken up this and I can't pay this, so I go for the next.
But isn't that how banks are promoting it, even like personal refinancing, or like they take the
digging up one hole to cover the other.
There are certain instances when you look at, I want to reduce my charges. I want to introduce the debt costs. So I'm going for a cheaper cost. Okay. So for example, in most cases, people will say, I want to settle all my credit card debts and I want to take up one loan, or I want to refinance my property or things like that to settle this up so that I can save on costs, which is true. But you have to ensure that you totally close up your loans and don't try to go for new ones for the problem is
accountability aspect.
They don't stop. So when you come back to your question is isn't that the banks are promoting? Well, there are sellers and there are buyers. Sellers will keep selling, and it's also up to the buyers to ensure that I can afford this or not. So I always give the example of a buffet. So there are there are dessert trays, there are your food. If you're, for example, a diabetes, you got to avoid the dessert tray because it doesn't fit to you, right? So hence, as a consumer also, we also got to be educated and to be making better decisions, because everything is there for us, right?
Yep.
And of course, definitely from the financer part also, more transparency in terms of you advertising, in terms of you promoting, show the real agreements, the fine prints and everything. Be more transparent with that, so that they actually know, the type of loans they are getting into.
Right. But frankly, I think if you have to refinance your loans that you're
Commitments,
servicing, it that in itself shows that you can't, you're not able to afford
This kind of
lifestyle.
about new loan.
So what is the other lifeline then?
Yeah.
The best lifeline, instead of taking out another loan to refinance?
If for me, if you are having loan problems, right, the best thing is to actually sit and analyze this thing. Okay, so what are the loans? List them all down, right, and then seek advice. Come to AKPK. We will help you negotiate with the financer, get a restructured repayment plan. If you have like one loan, two loan, you can still negotiate with the financer on your own. That's not wrong. That would be, for me, is addressing the issue there and there, rather than looking for other solutions that you would not end, in
Temporary solutions.
yeah.
Yeah.
And talk to the financer to restructure. Come to AKPK, we can help you negotiate for a not refinancing, sorry, a restructure of the debt. And not only that part has to restructure, your whole budget has to restructure also. So
Or even
yeah.
the lifestyle.
There has to be some sacrifices in life if you want to really achieve that. And it's possible, because we have seen many success cases in AKPK who have settled their debts that they have taken. So we have seen cases. So it's not to say it's impossible. It's really possible. And we have success cases of some who actually took up many loans, many credit cards, and then they came, we restructure. So they focus on following the plan, and then whatever extra they have, they start paying up one by one.
That's
and
great.
and they
That's
get to
great.
settle it sooner than the actual plan.
Wonderful.
So it's all about, you have this much of money. How do I manage to pool better? Like, what can I take from here to add on here and to add on here? Because that's what I have. The problem when it comes to the better solution is, we always go with this 4A. First and foremost, acknowledge there's a problem. The first A is acknowledging. So when it comes to taking up a new loan to settle up the old loans, is I've not acknowledged I have a problem. I just keep finding for quick solutions, and I keep adding on to it. So that ends up to bigger problem. So acknowledge this is the problem, okay, and this is my behavior that's actually causing to this, right? And then the second part of it, the second A, is analyze what I have. So like I say, write down the loans, write down your expenses, your cash flow statements, so you write this down, and you write that down, actual expenditures, not what you think you spend, because sometimes we just write what we think. But so to get the actual expenditures, doing the tracking, that means every day you write your expenses, right? Then you act upon it. So either you go to the financer, you speak to them, you act upon your budget. What can you reduce? And be realistic. Don't go drastic, like say, I'm not going to eat outside at all for a month. That's not going to work.
And then you'll fall back.
And you'll fall back.
Have
So be
withdrawals,
very
and then you'll
realistic
splurge
with
more.
your what you got to reduce, what you can reduce. Be very realistic. Sit and analyze that. And the fourth A is, of course, coming to AKPK. If you can't, if you're
Right.
stuck here and doing this analyze, you're stuck at analyzing it, then you come here. We have our advisors who could actually help you analyze it, and speak to and provide you the advice that's needed to
Right.
get out of it.
Nice.
That's really, that's very true. I mean, as with any problem, I think it's crucial for us to be able to reach out for help when we need it, right?
Right.
Don't be silent about
yeah.
it. Yeah.
Correct. Don't be silent about it. And part of safeguarding your finances requires changes in the consumer behavior part, financial education, having to elevate it, as well as looking at how we can improve our industry with better policies. Now, unfortunately, that is the end of our episode. This is such a very, not just interesting, but deep topic that we have to unpack, right? I think a lot of people tend to look at credit as something that's very unimportant because they don't see it. Visibility here is key, as you mentioned. If you take up a loan, maybe should take out the buku 555.
Yeah.
The old way of like
That's
practicing,
right. Yeah.
checking your hutangs.
But I suppose, I think there's not really a lot of excuse to not being able to see, like visibility, you said there. Because even with your savings accounts, right, all these banking apps that you have on your phone, you literally have a pie chart that you can
yes.
see.
Yeah,
And then
you
it
have
breaks down what you're spending on, how, what you're spending most on. So you actually, in real time, you get to see
Correct.
your spending habits, right?
We have to actually change that habit
And
and actually care for it.
and reaching out to people like
AKPK.
Nirmala from AKPK rather would help establish that discipline that we talked about earlier. which
Just
is
to
really
add on
important.
also that the financial advisory that AKPK provides is free of charge. So yeah, you don't
Free of
have to pay
charge.
for that. So it's just that what we feel is the acknowledging part. So many of them are still in denial. Even, like I say, the consumers now are better educated because you have all these facilities, apps shows you the pie chart. But how many of us actually go in and
No,
look at
yes.
the pie
Not
chart?
many.
For me, sometimes it's just a quick glance through.
Yeah, and we
And
don't
I'm
want
like-
to acknowledge it because
That's
we have
right.
the fear. It's scary.
Yeah.
It is scary.
Yeah. But sometimes having to confront that is better than having to realize that you're in deep trouble.
Exactly.
Again, Nirmala, thank you so much for being on
Thank
Beyond
you
the
for having
Headlines.
me. Thank you.
Thank you,
Absolute
Hazrin.
pleasure to have you. Yeah.
Thank you,
always,
Hazrin, as well.
Always a pleasure to be on here.
And don't forget to like the episode. If you do also comment and turn on the notification bell if you haven't already. You'll not only get NSC's Beyond the Headlines, other news reports on NSC Online will be delivered to you. My name is Amelia Kamal and I'll see you next week.